Hello. In today's chapter, we will continue with the last video. So this one is about the duties of the banker. In the last class, we discussed about who is a banker, who is the customer, what are the duties of a banker, and then what comprises of customer. Customer is someone who has a account in a bank. It may be any kind of account. It may be a saving account. Uh, it may be a current account. It may be a fixed deposit. This kind of thing. But whatever it is, someone having account, then they are considered to be a customer. Then we are discussing about what are the things the banker has got. Say a banker act as an agent, a banker is act as an bailey, and banker act as an bailey. So these are some of the what do you say? Some of the functions a banker carried out. In today's class, we will discuss about the duties of banker. Okay, so what are the duties a banker has to follow? So the first one is duty to honor customer check. It is a contractual obligation of a banker to honor his customer check as long as he has sufficient balance to his credit applicable to the payment of the check. If a customer or someone representing the customer on behalf of a customer, they deposit a check, then what happens? It is the duty of the banker to honor it. Okay, that is a pass the check as long as there is a available or sufficient balance to clear the check. An unjustified dishonor is not merely a breach of contract, but as a tort, as it damages the customer's reputation. Tort means it's something like spoiling the image of a customer according to the law. So what happens if a customer is giving a check to his friend or someone or some business transaction or something, if the bank didn't honor the check, that is they or cancel the check. Okay, so what happens? What will the third party who got the check they will think of? So it will affect the image of the customer. So thus the obligation, banker obligation to honor the customer checks depends entirely on the contract between the banker and the customer. So first one duty, as we see, is customers clear the customer check or honor the customer checks. Second one is to verify the check in an electronic image. Now they have electronic checks. So what happens? Those who receives payment on the basis of electronic image of a truncated check. Truncated check is a electronic check. Nowadays, the traditional check, which is in a paper, are being replaced by truncated check, which will be held by him under the duty to verify. So, and it is a duty of the banker to verify this prima facie genuineness of the check. Why? Because the check might be what you say might be changed, or the check can be a duplicate one, okay, altered one. So it is the duty of the banker to check the authenticity or genuineness of the check. Very important. Otherwise something goes wrong, then what happens? The money from the person account, customer account will be deducted, then they hold the responsibility of the banker. So it is their very important duty to verify the electronic check. Then duty to supply account statement. So many banks in the wake of modernization have dispensed with the system of passbook. Even though still we have a passbook, okay, and the customer duty is going to update it. Okay, either they give to the staff at the bank and update it, print the latest one, or there are machines, okay, which print the recent transaction of the customer. Okay, but now due to digitalization of banks, if those who are having online account, and online transaction, they're doing online transactions, online account and all those things, so what they can do, they can email to the bank, Okay, and then they can request the bank to send the statement. This statement can be like a weekly statement or monthly statement or every 6 months, like that. So they can request also. So the bank will request depending upon the request of the customer. They will send either weekly or monthly, like that. So it is hence it is a duty of the banker to assure the correctness of the statement, and it is a timely dispatch to the customer. So they have to give the statement, okay, either electronically or in the passbook, the current statement. So that is a very important one. And next is a confidentiality. So confidence of a, customer's account, the details is very very important. So the contract between the banker and customer is of confidential nature. A bank is under a duty of secrecy so far as the customer dealing with him are concerned, and would liable in damages if any loss is caused to the customers by leakage of secret information. So how much money they are having, okay, what is the transaction, to who he is paying, the customer who is paying, from where he is receiving the money, and how much he is receiving from the third party. So all these things are a customer confidential. So bank has to have proper system or what do you say, process, okay, so that this one is not leaked, okay, to the third party. So it is should be kept quite confidential, okay, because this is a matter of money, so it's very very confidential. Okay, now we see the role of RBI, Reserve Banks of India. Okay, so they have different duties they perform, and as I mentioned in the last class, all the banks, either it's a private, a public, a cooperative, all kinds of banks, they are monitored and they comes under the Reserve Bank of India, which is called the central bank for our country. So what are the duties of the central bank? Are the very special features of RBI we will be discussing now. Supervisor of financial systems. They also do the work of foreign exchange management, and then a banker's bank. Okay, they are the one who release the fund to the other banks. Issue of currency. Okay, except to 1 rupee, all the currency is being printed and issued by the RBI, and then these currencies are printed in Nasik, which is in Maharashtra. So monetary policy, bankers to the government, they are also the banker to the government. Now we see the first one, the issues of notes. The Reserve Bank has a monopoly for printing. Monopoly means they are the dominating one, they are the only one who has the right and authority to print our Indian currency notes. It can be any denomination, 2000, 1000, 500, 100, 50, 10, 20, all the denominations. But except to 1 rupee. This one is printed by the Ministry of Finance. Okay, so it has a sole right to issue currency notes of various denominations. So Reserve Bank has adopted the minimum reserve system for issuing, printing the currency notes. So since 1957, it maintained gold and foreign exchange reserve of rupees 200 crore, for which at least rupees 150 crore should be in gold and remaining in the foreign currencies. Simply a country cannot print a currency. Okay, if they want to print currency, means they should have reserve of 200 crore in their account. So what happens? So this in some countries this should be fully gold, or gold and foreign currency. In India, starting 1957, they maintain 200 crore. Out of 200 crore, 150 is in the gold. They have to have gold bars, and the balance is they store in the form of foreign currencies, usually US dollar, something. So the second point is the bankers to the government. They are the one who fund the government. The second important function of Reserve Bank is to act as a banker, agent, and also advisor to the government of India and other states, I mean the states in India. So it performs all the banking functions of state and central government, and it is also tenders useful advice to the governments on matters related to economic and monetary policies. It also manages the public debt of the government. A government want to borrow money from the central bodies and World Monetary Fund, or they want to give money for some, what do you say, to some country in the case of some, what do you say, disaster. All these kinds are, they want to I mean the government want to introduce a new financial, what do you say, a policy something. So all these things, especially to the Ministry of Finance, the advice is given by people from the Reserve Bank of India. Okay, so they are not just, what do you say, the banker to the government, but they also like yeah, advisor, and they also agent, where they give some inputs during the government decisions, important financial decisions, or a decision pertaining to the any financial issues. Bankers Bank, Reserve Bank performs the same function for other commercial banks as the other banks ordinarily perform for their customers. Like how the banks perform the duty of a banker to a customer, the same duty of a bank is carried by the RBI to all the banks, okay, in India. So RBI lends money to all commercial banks of the country. So these are the, in case of I mean, any bank is like having a financial loss or something. Okay, so they issue money to the these banks which is undergoing this loss or financial issues. Same like a customer having like some financial issue, the bank may sometimes give loan, or the bank may give some overdraft of their check, which means that even though the sufficient money is not there in the account, but the what do you say, the customer can withdraw more money. Okay, so it becomes like the customer want say 1,000 rupees, but in his account only 500. So 500 extra he can take from the government, provided he's like a long-term customer, something like that, loyal and long-term customer. So that facility is called overdraft facility. So like this, how a bank helps a customer, in the same manner the RBI helps the other bank. Okay, so that is a bankers bank. Okay, so that they perform the same duty. Now we can see a classic example. One of the bank in our country, okay, private bank, they have a lot of financial issues due to some problem with the MD of the bank. Okay, some what do you say, some issues. Okay, so because of that, the bank was almost, was going to close, something like that. So RBI intervened. Okay, they help. Okay, to recover that particular private bank. So it is the duty of RBI to be the bankers bank. And then controller of credit, which we'll be seeing in detailedly. Okay, the RBI undertakes the responsibility of controlling credit created by commercial banks. RBI uses two methods to control the extra flow of money in the economy. These methods are quantitative and qualitative techniques to control, which we'll be studying detailedly, and regulate the credit flow in the country. So when to issue, how much is to issue, okay, so to a particular customer or to a bank. So this is a very important for a healthy financial, what is a financial health or financial stability. So when RBI observes that the economy has sufficient money supply, and it may cause an inflationary situation in the country when it squeezes the money supply through its tight monetary policy and vice versa. In other words, usually in our household, whenever there is some crisis, okay, someone like seek some money, more money is required, or some college or tuition fees, or something like that. So more money has to be channeled to that one. So the usually the budget of the household will be having issues. So that time what happened, the head of the family who is taking charge of it, whether a mother or father, what they do, they have a very strict control on expenses. Okay, so same like that, when the country is having a situation of like inflation, the increasing in the prices of the commodities. So what happens, our product, so what happens, they have a very strict or tight policy. Okay, like that. So same thing like how they do in the household, the RBI will do, so that our economy will be, I mean, our economic condition of the country will be stabilized. Then custodian of foreign reserves. So for the purpose of keeping the foreign exchange rates stable, the Reserve Bank buys and sells foreign currencies, and also it protects the country foreign exchange funds. So what happens, in order to have a good exchange rate for our rupees, they also buys and sells the foreign currencies. Okay, so it can be a US dollar, it can be a UK pound, Singapore, I mean Singapore dollar or Malaysian ringgit. So it can be anything. So all these things, the buying and selling is done by the reserve banks. So RBI sells a foreign currency in foreign exchange market when the supply decreases in the economy and vice versa. So currently in India has a foreign exchange reserve of around US dollar 487 billion. Okay, so that is the amount India is currently having. To the till date, to our current date, India is holding the money of 487 billion US dollar. So that is the amount of foreign exchange we are having in our country, or in India. So other functions. So other functions, the Reserve Bank performs a number of other developmental works. So these works include the function of clearinghouse, arranging credit for agriculture, okay, which has been transferred to NABARD, collecting and publishing and the economic data, and buying and selling of government securities. So what happened? Arranging a credit for agriculture, because agriculture is considered to be the backbone of our country India. So what happens? Because agriculture also, once maybe now it's going down. Okay, I mean people don't want to be a farmer or do agriculture, but many people, what do you say, they shift from the what do you say from the countryside to the city. So because of this, our agriculture is this thing, but because due to our weather conditions and fertility of our land, agriculture contributes actually very substantial amount to our society. Okay, but the things now are quite changing. Uh, and the trade bills, giving loans to the government, buying and selling of valuable commodities. Okay, so what happens when government buy or something, anything, so what happens, this money is given or supported by the our RBI. It also acts as a representative of government in International Monetary Fund, so I.M.F, and represents a membership of India. So what happened in International Monetary Fund? The representative from India for any meeting or any borrowing from the Indian side, anything related to the financial side, when dealing with this is the international body, International Monetary Fund. So that in that part, the representation of India is from the RBI, okay, Reserve Bank of India. So that's all for today's class. So today we discussed about the very important duties of a banker, okay, and then the special features of RBI, who is our central banker for India. So that's the Reserve Bank of India. Okay, thank you.